Hello everybody, this is TJ with the PTU Trend Jumper and netpicks.com. In yesterday's video I talked to you in length about dynamic targets. I showed you some real trade examples, trades that were taken in our live trade room in the Dow E-mini, as well as a Forex example of one of the trade plans that we are actively following and trading as well in the Euro Aussie. And I showed you how the chart is self-adjusting to market conditions, and that one trade will look different than another based on the current market condition at the right edge of the chart. One of the things we like to do is trade with multiple positions so that we can take advantage of not only a high percentage target that has been tuned to market conditions and has a good chance of succeeding, but also a second position that can take advantage of markets that are explosive and will zoom past the target and continue to go. Every now and then there's a runner, a trade that's going to hit the ball out of the park and post some really large gains if you have a way to stay with that trade. So we like to trade with two positions and get to a risk-free position as quickly as possible. We use the trend jumper indicators to tell us just when it's appropriate to move our stop, lock in a tick to cover our costs, exit at a dynamically tuned up target, and then stay with a risk-free position and trail to try to catch a bigger move. And all we need are the trend jumper indicators to do that. I want to go back to last Wednesday. This was an amazing trade that took place in the trade room. Remember what I said about the Dow E-mini, that we start trading at 8:32 Central Time or 9:32 New York time. So here we are at 8:31. And it zooms past the entry prior to our start time, and then it hits the first target. We call that a money management level. When it hits the money management level, the stop is going to move from here up to here and lock in a tick of profit. So we're not going to chase this trade. This trade left the station before our start time. We cannot try to grab this trade because it has already hit its money management level and the stop is already moved up above the entry. So now we just wait for the next trade. This would be the first trade of the day. Okay, remember, back on the 30th of July, last Wednesday. I'm showing you this because this illustrates how powerful our trailing technique can be with the trend jumper. This green dotted line, that is the jump line. And we're going to try to jump off that line under certain circumstances, because what it does is it indicates near-term support and resistance, and it gives us great trade setups. It's a fantastic momentum indicator. Notice that the price is below that line. We're moving lower. We get a jump trade. You can see the entire trade, the target dynamically tuned, appropriate for this market condition. We're going to get short at 98. We're going to exit one of our positions at 82. It's a nice 16-point trade, 16 ticks. YM trades in points. Every point is worth $5. Okay, so this comes down and it ultimately triggers in right there, and it bounces around a little bit, takes a little bit of heat, but our stop is up here, right? Well placed. Then the price pushes down and it pushes through what would be the money management level right here, the white dot. Okay, so at this point in time, we're going to actively go to our platform, our order entry. Whoops, I got my snap tool on. Let me turn it off. All right, and we're going to move our stop, which is at this level, right? And we're going to move it and lock in one tick. Okay? So short at 98. Now we have a stop at 97. We're in a risk-free position. No matter what happens, we're at least going to cover our costs. And it pushes through this target right here. So we exit half of our position with 16 points. So that looks exactly like what I showed you yesterday, the dynamically tuned target. Are we interested in the pink trade? No, we're not. We're not adding to our position like we would with Forex. That's not part of what we do with futures. So we're only interested in the white trade. Okay? So at this point, the green dotted line, the jump line, now becomes the tool that we use to trail our second position. It's right there in front of us. And with every bar that closes below the jump line, we're going to move our stop and keep it 2 ticks above or 2 points above. Okay, we're still locked in with one tick here at 97, but now the jump line says move it to 2 ticks above, so now that stop's going to go to 96. And with every bar that closes below the jump line, we take the reading of the jump line and we put our stop 2 ticks above. So now it goes to 92, like that. And we continue to trail that jump line down. Remember, the jump line is showing us near-term support and resistance. It's also showing us that momentum is down because the prices are closing below the jump line. And this faster line is what we call a confirmation line, is also below the jump line. So we know that momentum is down, and we want to give this trade room to go as low as it can. So we're just going to follow the jump line, and with every bar that closes below, we continue to take our readings and move our stop lower and lower. At this point, it would go to 89, and I would just push it up over 91 and work around the key level. I always like to go around 10s and 5s. It's just a habit that we do. Sometimes that keeps you in a bigger move, but it keeps pushing lower. Now it's going to 81, and you just keep following it down, 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 down. You see what a great trailer that is? And this is one of the beauties of the Trend Jumper. It's so simple. It's so visual. It's right there on the chart. There's no guesswork. There's simple rules to follow. The bar closes below the jump line. You get the jump line reading. The stop goes 2 ticks above. If you're near a 0, just get above that. So I got my stop at 41, and it continues lower. Now it's at 22, so you can put it at 24, but I'm going to go above to 26. Can you put it above the swing level right there, that pivot point, whatever you want to call it? You can, but I just tend to stay with the jump line and work around the 5s and 0s. I find that that works really well, unless there's a pivot or swing level that's right next, maybe 1 or 2 tick adjustment only, maybe 3 at the most, and then it stops out right there. And if you put your stop a little higher, like I said, would have it stayed in the trade? It might have. No, it didn't. It would have stopped out anyway. So this trade finishes at 26, okay? And instead of only 16 points on the trade to that fixed target, what's that end up getting? It ends up picking up 72 points. 72 points on the trailer. Let's look at the risk-reward ratio here. When we started this, I'm going to put the 2 lines here to indicate the entry and the target. So the space between these 2 lines, that's how much we're risking, right? Then we're exiting at the middle target. Look at how that's greater than our risk. Our risk-reward ratio is in our favor. This is what happens a majority of the time with the Trend Jumper. Could you go to the 3rd target? You can. Look at the risk-reward now. It's practically 2 to 1. The only thing is we've been going to the middle target with this strategy for so long, and the results have been so good that we just kind of keep doing it. You could go with 3 positions, exit 1 of them at the middle target, 1 of them at the 3rd target. You're risk-free, but don't forget you're in a risk-free position at that point. And then, of course, trail all the way down. Look at the risk-reward ratio with the final exit. You risk this little amount in order to make this much. Now, we don't always get these big runners, but we get them often enough to make a huge difference. And I marked up the chart just to show you, this is how I usually show screenshots where you could actually see where it gets in. You could see the move down, where the exits were. Really great trade. 88 points. Of course, we're one and done on this market. This week ended with 170 points, half of them coming on this one trade. That's okay. Sometimes 20% of your trades makes 80% of your income. That's just how the world works. Let's look at another quick example. We're going to look at what happened today on this market. This is heating oil futures. It's maybe a market you hadn't thought about trading. It's definitely a market that requires practice. It can move really quickly, but it creates great trades and great running trades. So I want to show you this because the runners on this are just phenomenal. It's $4.20 a tick. Okay, so we start this right at 9 o'clock. So we're trying to get into our session here. We're waiting for 9 o'clock, and you can see there's a setup here, this yellow trade, and it's at 8:52, and it hasn't hit the stop, but it did trigger in. So notice that on this little bar, let me make this bigger so you can really see this. Notice there's a little spike right there that spikes up. I'm interested in this yellow trade, not if it comes up and hits the entry. I want it to push through above that spike. You've seen me do this on other videos where I ask for a little confirmation if I'm trying to get in sync with the trade. Okay? Meanwhile, there's this short setup, and I'm not really interested in that short setup. I'm interested in the long because I'm above the yellow line. I want to let this one trigger in, and actually it does trigger in. You see, once this trade triggers in, I'm not going to stop and reverse to short unless it comes down and hits the stop first. Then if it pulls up and touches my entry, I'll get short. Okay, so we get long here when it spikes up. Notice that the time is after 9 o'clock, so that's after our start time. It gets long. It's a valid setup. Happened before the start time, but we're going to get in sync with that trade. And so look what happens. It pushes higher. I'm only showing you 2 targets in this case because we don't really need the third target. So just to make for a cleaner chart, this is where we're going with our first position. I also want you to pay attention to our risk-reward ratio on this one. Again, you can see the space between the 2 bars. We're risking that much. With half of our position, we're going to get out here. It's practically 2 to 1. Okay? And it vacillates around a bit. I'm not interested in any other setup. This short actually canceled, by the way. And we exit here with half our position. And now we're going to trail the exact same technique I showed you with the Dowie Mini using the green dotted line. Now, it doesn't matter if this is heating oil, the Russell, the S&P, crude oil, the Euro US, Forex, the Spider. It doesn't matter. It's the same technique. You just follow the green dotted line. And with every bar that closes above it, you're going to trail 2 ticks below it, and you can see that it goes and goes. Now, look at this. It looks like it might stop out, but remember I said every bar that closes above it. So this bar closed above it. The stop is at 87. It gets as low as 90. Hasn't hit 87. It might, but it hasn't hit it yet. Yep, it actually does hit it. So this one's out at 87. We got in at 85.79. Okay, we got out at 86.15. And we got out at 86.87. All that adds up to 144 ticks in one trade, and you can see how, again, the risk-reward was favorable to the target, 2 to 1, but look at what it was on the trailer. We risked this much in order to get that much. And don't forget that by the time we're trailing, we're already in a risk-free position. That's the basics of the trend jumper, guys. That's how you trade multiple positions, and that's how we utilize our dynamic trade setups, taking advantage of price action using the jump line to not only indicate where near-term support and resistance is located, but how to trade off of it, and then use the same indicator to mark our exits on nice running moves. Be sure to sign up for one of our live demos, and hopefully I'll see you there. And if you have any questions, that would be the time to ask. Have a great day, everybody.